The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 14th, magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. Let's go ahead and get this show kicked off on this magical and magnificent, marvelous Monday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a flat market, really. You've got the Dow trading up 30 points. She's trading at 17,233, while the S&P is down 2 points, trading at 2020. It's got 2020 vision out there. NASDAQ Composite up 6 points. That's trading at 47.54. Russell 2000 off 4 points. So a mixed bag out here. The DAX is not mixed. It closed up 159 points. The FTSE closed up 35. We have Goldilocks trading back $15 at 12.44. Silver off 8 pennies, trading at 15.52. Light sweet crude back $1.45, trading out at 37.05. Leaders here to the upside, individual stock-wise. We've got GW Pharma. That's up 52 bucks, 136%. They have obviously cured something, or it's a buyout. They've got positive results on one of their phases out here, and stock is moving higher, and I can imagine there's some big volume behind that move. You've got Intuitive Surgical up 13 bucks out here. That's up a couple of percent. Chipotle is up a couple percent. That's up 11 bucks. Priceline is up 11 bucks. Zenibra Pharmaceuticals 95%. Whoa. Holy goodness. Holy cow. That thing is up. What did they cure out here? We'll have to take a look at some of those. That's just fourth quarter earnings. Man, oh, man. Okay, so that's moving to the upside. Google is up about 8 bucks. Tesla's up 7. Starwood Hotels, we know there's a buyout there. Chinese just simply trying to get as many of their RMB, or their yuan over anywhere, just to buy any kind of assets out there and get it the heck out of Dodge City. That is a very popular city in China. You've got The Fresh Market, TFM. That's up 23%. Holy shnikes out here. What is the deal there? Shareholder alert, what's the deal here? This is a buyout for The Fresh Market? Maybe that was already in the news a while back. Also here, let's take a look at what do we have here to the downside, individual stock-wise. You've got Equinix. That's the leader dollar-wise, off of almost 7 bucks, down 2%. Just behind it, Arista Networks, that's off 11%, off 6 bucks and change. Allergan, that's off 5 bucks. Regeneron down 5 bucks. Credit Acceptance Corp down 4 bucks out here. Illumina down 4. So we got a bunch of individual stocks that we can certainly take a look at. But first, let's go ahead and get a feel as to what's going on inside the market. Now, what we want to do here, let's go take a look at the daily contracts for the equity futures. And we'll start off by we'll look at the current contracts with the roll going into June. And really our focus has been, so let's go ahead and continue that focus as we speak right now, has been inside of the NQ. Inside the NQ, we know that it's struggled. Really, if we take a look at the March contract, still active out here, but if we take a look at the March contract, this is going to show it better because these market profiles change when you go from contract to contract. And as we take a look, and this is going to give us the better data. Now, the better data that I'm referring to inside the NQ, remember the markets had been moving higher without the participation of the NQ out here. Well, that is not the case as we speak right now at 111. So even though the markets are kind of quiet, the NQ is giving you a very big signal. That signal, assuming, I don't know if it's going to close like this at 5:15 or not, but we'll want to check back in. Certainly we'll want to check back in tomorrow. But right now, as long as the March contract closes above 43.58 and you're trading at 43.73, now you've got room to run to the upside. In fact, you've got an A to B equals CD out here that we can take a look at. Let's do that. And we're going to look at the daily chart, then we'll go take a look at some intraday time frame charts out here to get a feel for what their message is, so that you can understand what's going on. So this says here, inside the NQ, very likely that it's going to at least target 44.56. Now that it's cleared resistance, our horizontal TAS market provides both weekly and daily out there, says you run to 44.56. That would be your first target. Now, if we take a look at a retracement level from the high out here in the trading session of December 2nd down to the low out here on February the 11th, the 0.618 retracement level is not that much further overhead from where we're at. So 44.01, we're at 43.72 right now. 44.01 is the first next target, but it looks to me like it'll be able to get its way through that, then head up to 44.56. So that's what's going on inside. And now you can see here, if we switch over to the current contract inside the NQ, you don't see any resistance. You see weekly resistance up here, but those lines don't mean a whole heck of a lot of beans. There's not enough information. That's why I went ahead and created this synthetic contract, which really stitches these contracts together to provide us with better market profile information. But I don't need to confuse you. We can still just take a look, as we just did, and I may have just confused you. But eventually I'll switch over to that for a couple-week period of time, just to really understand where these levels of support and resistance are horizontally. So now let's go from the end. So the NQ has finally, well, let's actually do this here. Let's stay back on the futures contracts. Let's go here to the old ones, to the March. Because what we can see here, the upper left-hand panel of the screen is the S&P futures, and you can see how it is already above all forms of resistance out here. So it has the freedom to run higher. And nice wide-ranging bar, as you can see here on Friday. Markets don't end on wide-ranging bars, so this is suggesting to you and I higher price. Now, where are the next levels out here? If we just simply take a look at logical retracement levels, this says about 2,038, give or take a few ticks out there. So that is where it looks like. Now, that is on the March contract out here. Really, the purpose of showing you this is that if we take a look at the Dow futures out here, you can see that the Dow has another, you're at 17,241 in this contract, so you've got another 341, but another 150 points higher before it should really run into a resistance zone out there. Okay, so that covers the Dow, the NQ, the S&P, but at this stage here, everything looks like it wants to run higher. Now, what's holding it from really taking off today? It could be the Fed. Let's go look at some intraday patterns. In fact, let's go from the daily to the 5-hour chart here. We'll have to do this when we get back from this break. We'll start here, taking a look at the 5-hour chart here for the NQ. It's above resistance, so everything looks good there. It's been moving higher, doing it with enough relative strength out there to not worry about any kind of diverging pattern. If we look at the 2-hour chart out here, 2-hour chart, says to me that it also wants to run higher. What we notice here on the 120-minute chart, we've got new profiles continuing their stair-step move to the upside out here. So no real resistance there. The resistance must be. I'll get it out here in the 30-minute chart. So let's go take a look at it. This in about 4 minutes. We'll do when we come back from this breakout here, and here we can see the resistance. Steve Rhodes with TFNN. Be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's about 29, up 29. S&P is still up 2 points. So we've narrowed it down to signals coming from the 30-minute time frame here for the NQ. Now, when we take a look at this, we can see that at the moment, prices continuing to rise. Now, this is rising off of the 4 o'clock high. This was on Friday. So we can see that the prices continued to the price really began rising right here at about 10 o'clock this morning here. Well, let me blow this up on my screen for you. So if you're watching this on TigerTV, what we can see here is we can see that the most recent set of market profiles, you see the blue line and the red line? The point of control on here absolutely is also right down at that bottom level. So even though this market profile formed at a lower level, really strong support down there. And as soon as price closed above that red line, the resistance level 43.36, that said, hey, at least you want to go. At least I would want to go ahead and make a run for its previous swing point. That was the one from 4 o'clock in the afternoon last Friday. We can see that prices continued to move higher out here, doing it with less relative strength. That alone is not a reversal pattern for us. We got to wait for the bears to show up, and then we need a confirmation. Bears first tried showing up right here at about 11 o'clock. When was this? 11 o'clock. That was 11 o'clock. 11 o'clock this morning. But they just simply were trampled upon the very next candle. No confirmation out here. A little dark cloud cover. This was at 12 noon. No confirmation. Those clouds parted. And so at this stage here, the NQ can still start moving can continue moving to the upside out here. The cavalry for the bears has not shown up just yet. And we know that the NQ, the question is going to be, is this thing just because this has been so wound up out here that, is it really going to release a ton of energy? When I say wound up, if you just look at all of these trading sessions here from the March 1st level, take a look at all these small-bodied, couple doji-style candles, all trading with inside that nice move on March 1st out here. Is this thing just ready to just unwind? And when it does, and if it does, I can't say it's going to at this stage, but it does look to me like it is, right? It's cleared resistance out here. Depends on where it closes at 5:15. But assuming that it does continue to move higher throughout the afternoon, the question is this thing just simply going to finally get, has it gotten its tires changed? Is it all full with gas? And now it's ready to go ahead and lift the markets higher out here. Maybe. That's what it would appear to me. If we let's go get some confirmations by taking a look at the other. Well, let's go take a look at what also could be getting in the way. That would be light sweet crude. We mentioned light sweet crude was trading to the downside as we speak. It's off a $1.44, trading at 37.06. Now that alone is not bearish or anything, but if we take a look at where it's likely to pull back to, that is light sweet crude. Well, number one, you're going to see the top of this little consolidation. So let's look at the consolidation prior to going ahead and putting our market profiles out here. So you and I drew this consolidation pattern in a long time ago. And so with this pulling back, says that you could easily go test the top of that consolidation. It's somewhere right around the $36 level. Could be, 10, 15, 20 cents lower, higher, but right around that $36 level. You're trading at 37.06 right now. That would be normal and natural to come back, test it, reject it, and then it would be ready for its next leg higher. If we go add our sideways market profiles out here, what this shows us is that we have a brand new daily that is formed on our box. Maybe you can't see that, so let's just go ahead and turn off the weeklies. There we can see the new profiles. Maybe you say you still can't see it. We'll turn off price. There you go. You're looking at those blue lines. Now, when looking at those blue lines, this new daily, this is set up here because you've got that point of control closer to resistance, right? This says that it is sellers, the snipers that were sitting right there up at those highs, right around 38.54 to be exact, ready to go ahead and push the price of light sweet crude down to 35.64. So you've now got a consolidation. You've got the bottom of a profile out there. It says that is likely where price is headed. Now, we know that the light sweet crude in the U.S. stock market have this extremely amazing tango going on out here. Where last week it was 4 out of 5 sessions where if the light sweet crude closed higher, the market, the S&P closed higher, vice versa out there. So it was 4 out of 5. Doesn't, 4 out of 5. Those are pretty good odds out here. And it's the S&P that I'm tracking when I'm giving you those odd statistics. But it looks to me at this stage here that light sweet crude ought to make its way back both to the top of that consolidation, the bottom of that box. If we see it close below 35.64, then you could fall all the way back down to the bottom of the consolidation. Unless we've got some weekly support out here, and the answer is no, we don't, because where price ran into resistance happened to be the brand new daily box as well as the weekly box out here. So really good chance that we're going to see price come down and test that 35.64 level. So that says a couple days of perhaps moving lower. Now, again, these things can come unhinged. Unhinged is not the right word. The correlation just simply evaporates for a few days out here. But at this stage, the signal there is that even though the NQ is ready to go, maybe it's the S&P that is not ready to go just yet. Let's go look at its 30-minute chart, see if we can figure anything out here. On the 30-minute basis, we saw here that price moved higher. This is into 4 p.m. on Friday, moved higher, did it with less relative strength out there. Nice little reversal candle as we came into 4:30. Contract close, though, didn't really give us a great confirming signal out here, meaning price did not move lower. We saw it bounce just a tad, kind of negated for the most part that little bearish engulfing candle. But here's what has happened, and here's where we'll probably get a pretty decent signal. Got the NQ ready to go from this high, this price relative strength divergent high out here at 4 o'clock on Friday afternoon. Price moved lower all the way down into 10:30 this morning. And in doing so, by 11 o'clock, you got a confirmation of wave number 7, that 7th inning stretch to the downside. That says in a real strong bull market or a market that's moving higher, a pullback that gets to that 7th inning stretch, it should now be ready to go ahead and finish the game and continue to move higher. So this actually says, hey, you light sweet crude, that tango, the heck with you for the time being. I'm ready to go move higher and draft behind that NQ. That's its message. Now, little bit different message if we were to see it close below the low here of 2002. So you get down to 2001.75, one tick. That says maybe not so fast. But right now, the ES 30-minute chart is saying no problem. It's ready to rock. It's ready to roll with the NQ. Let's go take a look at the Dow 30-minute chart out here. What is its message? Its message is that just like in the NQ, it has been moving higher, doing it with less relative strength out there. But no bears have shown up, so this can continue to move along to higher price out there. So let's go take a look at a few other things inside of the market. So in summary, got the NQ, that is over resistance. Got the ES Mini that in 10:30, I believe it was 10:30, 11, gave us a signal that it was done moving to the downside out here. The Dow is kind of like the NQ. It's along for the ride, even though it's up 36 bucks right now. Now, inside of the Dow, its biggest issue here is it's been moving higher, and it's doing it with less advancing versus declining issues out here. And that can present a problem. If we take a look at that chart right now, it is not below the zero line. You see this little declining tops with prices moving higher. It never ends really well. Now, when I say it doesn't end well, it could just simply be a retracement that is this big versus this big out here. Now, what did I say? I was using maybe like about an inch or two versus a couple of feet. But it is a pattern that we want to be aware of. So what does this say? It says that geez, I have to really be a really great stock technologist to tell you there's going to be a pullback, eh? This is saying we just got to be careful. When these patterns form, what we don't know is really the depth of the retracement. Just like Goldilocks. The depth of that retracement going to far out exceed what everybody other than Steve-O is seeing. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back Dow's up 26. S&P is off about 2 points. So really no movement in the last 30 minutes out here. Let's go take a look at some individual stocks. We don't really spend a lot of time doing that, but today, with it being kind of a nice quiet day out here, a quiet day with regard to cards and letters, emails, and so forth, let's go take a look at GW Pharma. So GW Pharma looks like they got back some positive results on a placebo versus pot test out there. Yep, marijuana, cannabis, and specifically looks like dealing with epilepsy for young kids out here, and really getting really controlling the seizures out there, the convulsive seizures. So that's pretty cool. Pretty cool for those kids that obviously have it. So if we take a look at the medicine that's impacting here, GW Pharma. Why GW versus anybody else out there? I don't know. Maybe it's some magic dope that they've got. But nonetheless, talk about a move to the upside and volume behind a move. 8.3 million shares out here. So I don't know that this thing has had that type of share day. Well, no, just going back to 2014, I don't see. Let me see if I could pull this back on a daily chart here for a while and see what kind of volume we've got compared to. So GW Farm looks like it goes back into 2013 timeframe. So it's absolutely happening. It's a best single day out here. Now, where price has moved into is a little resistance zone. If we take a look at it, looks like it's TAS market profiles out here. It's really trying to, now you talk about a wide-ranging bar, it does not get any wider. Well, I suppose that it does, but that's one heck of a wide-ranging bar. Remember to fill in the gap out here. This is a gap that is certainly your friend. Now, maybe this type of gap here just totally changes the dynamic of this company. I really don't know. You'd have to look at it. But here's what we know about price. You've got big volume behind the move out here. I'm not suggesting that you chase it. In fact, I'm saying if you're in it, great, and if you're not, just keep watching it, perhaps. But it looks to me like if this can close above 52.50, oh, no. Oh, that was a new profile. If it closes above 90, it closes above, it looks like it might have been 90.57, and you're at 91 but right now. So anything above 90.57, this probably makes a run all the way for its highs back here in June of 2015, somewhere in the 130-ish type range out there. So that's GW Pharma. Things are looking pretty rosy there. Priceline, PCLN, it's up about 1%. That is $13 to the upside. This thing has had a nice move here recently. It is now up above. Give me a moment here. Looks like this is really headed to the last time that this struggled off of its highs, which was back on November the 9th. This thing had moved down with 2.6 million shares. The opening, or the high of that trading session, I should say, on November 9th was 1386.98. That's where that window, that's where that gap is. And it looks like that is where Priceline is headed to. Volume behind today's move so far, you've got 274,000 shares. Kind of light compared to a Friday, but nonetheless, as long as it clears 1342, and you're at 1340 right now, 1386 is in the cards for Priceline. You've got Chipotle. CMG is a ticker symbol. This thing is trading up about $11.50, a little over 2% out here. What can we see inside of Chipotle? Bit of resistance from a few days ago to its most recent swing point, which was the trading day of March 8th. That high was 542.50. Looks like it's really headed to that area. That trading session had 1.1 million shares. So yeah, I've done 700,000 shares today. So you'd have to say that watch the high inside Chipotle. If Chipotle can take out 542.50, do it with more than 1.1 million shares, you'll have an A to B equals C to the upside. Chipotle will run to probably into the range of about 669, and you're at $500 and change right now. CMG being the ticker symbol. Let's look at a couple of stocks here that maybe we have not looked at. Well, I'd take a look at Zenerba Pharmaceuticals. I'm sure that is not how you pronounce it. It's up 107% up here. Probably not a real. That's also a nice wide-ranging bar. What did these guys do? So what did they do? Reported fourth quarter loss of, this is all based on earnings. Gapped up slightly higher this morning, is now up. So this thing is supposedly, they didn't cure anything, but they cured a stock up problem. Let me see here. There we go. So FDA grants orphan drug designation for Fragile X syndrome. Okay, so this thing here, I don't know what that is, but what we do know is big. No, so this is an IPO. That's a daily chart that takes you back into August the 5th out here. Now, this equity had gone from a high of about 43 bucks. Yeah, the high was 43, and this was back just back in August of last year. So you're only talking, what, 4, 6, 7 months out here. And in 7 months, it went from that $43 level down to $4.78. But today, it's so a little bit of a psycho stock here. I probably should have used a medical terminology to describe it, but I don't know how else you can describe it. But nice volume behind that move today. Don't try to get in on this thing. Let this thing pull back, and I don't even know if you try to get in on this. Not much in the way of volume here. On average, looks like probably about 50, 60, 70,000 shares or so per day. So kind of not the most liquid of instruments out there. ZYNE, by the way, is a ticker symbol. If we take a look at Tesla, TSLA. So if we take a look at Tesla, this is up $7.80, about 3 7/10% out there. Let's go take a look at it, see what this is doing. Nice little V-shaped recovery here as we speak right now. That's coming off those February lows, February 9th in the case of Tesla. Volume-wise, though, nothing really magical about the volume inside of Tesla. So let's go try to figure out where this might run into resistance. No resistance at its market profile. So let's go ahead and turn those things off. Let's not let that get in the way. I don't know what Stevie's red box was out here. Probably was a consolidation pattern that had broken below, but it has now broken back up inside that level. That's positive. I'm not so worried about that. We're going to get rid of that consolidation level because it never really acted as support. So here's what Tesla is trying to do. Maybe it's already done it. Let's go take a look at a trend line. A trend line starting from the high on July 20th. And I think we can use that as the trend line. So when we take a look at Tesla, just bouncing back to an old trend that it had that was acting as resistance, it may continue to act as resistance, and we won't know until the trend line gets hit. That is priced out somewhere around the 220-ish type range out here. Just draw a trend line off of the highs from July 20th, and then I would just simply use the high from December 30th out here. We can see that that is where Tesla is headed to. Now you get back above that level, then that downtrend will have come to an end. But right now, that looks like the resistance zone for Tesla. Let's look at one last stock here to the upside. Which one will go multiple choice? I don't want to take a look at Starwood. Let's take a look at, guess we're just going to go with Amazon. Up about 1 2/10%, up $7. What is Amazon doing? Don't have the profiles turned on, but let's go take a look at what Price is doing. Price ran into resistance last time that was up in this range here, where there was a gap down with some volume out here. So that's at the January 29th level, and looks like that's really where it's headed to, between 570, which is trading above that right now, 576.60 is what it's trading at, all the way up to 593. Maybe as high as the low of January 28th. That'd be 597.55. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 33 right now. S&P is off 1 point. NASDAQ Composites up 9. Question inside the Tiger's Den, if I would take a look at gold, try to come up with some lower targets inside of the shiny metal out here. So let's look at some different time frames and use some different tools to give us a gauge as to what the current contract for gold is doing. So right now, as we speak, you've got gold trading out at 1245. If we just simply take a look at retracement levels, that means coming off of the low from December the 3rd, when it was priced out as low as 1046.60, up to the high of Friday, which was out at 1288. It was really late Thursday night. I can't remember when that spike. I think it was late Thursday night or early Friday morning. Either way, you saw gold trade up to 1288. You're at 1245, so it's off by about 45 bucks, right? $40 right now, 43 bucks, somewhere right around there. Now, just simply looking at natural retracements, we're going to go from the swing point low to the swing point high, says gold could pull back to 1138 and there'd be nothing wrong with it, other than you'd have people jumping ship and there would be people really pushing the accelerator saying, hey, I was wrong on that trade out there. So that's a real possibility, very much real possibility. But the first target becomes 1195, 1196. That happens to be your 0.382 retracement. So that's what that says. If we switch over and take a look at this contract, no, let's also do this here. Let's go take a look at some market profiles, give some targets. These are initial targets out here with regard to gold. So that says 1195 to 1138. If we take a look at market profiles out here, this says that as soon as price gets below 1239, which it will, this says that price will head back to the 1218 to 1203 level. 1218 happens to be the TAS low on its daily, and the point of control is 1203. So really good chance you're looking at 1195 to the 1218 area out here with gold. Get below 1195, this suggests 1162. On a short-term basis out here, if we turn it over to a 30-minute chart out here, let's get rid of those daily profiles, and instead, let's go ahead and see what's going on the 30-minute time frame. Let's go see where those profiles are forming. Is the current one bullish or bearish out here? Now, pretty hard to tell from that, right? So let's go ahead and turn off price. because this provides us with a ton of information. And in this current market profile, it's pretty much equidistant, right? That point of control, it's right in the middle there. So this is not telling us a whole lot other than it has not changed its trend out here. That's what that shows us. If we go ahead and put price back up here, what you will see is that during the last half-hour session out here, this is a hammer candle. Okay, interestingly enough. So at 1 o'clock, we've got a little 30-minute hammer candle that showed up. Now, the bottom of that hammer is 1242.70. So, Danny, any close below 1242.70 doesn't have to do it this half hour, which ends in 15 minutes, or the next. But you know the expression, if you're long, you're wrong, when you see it close below a hammer candle. So the next important price inside of gold is 1242.70. You happen to be trading at 1242.70, 1242.80 as we speak right now. So watch that as the price level. That's actually more important, in my opinion, than this little swing here at 12 noon. Now, if we go take a look at one other thing on a 30-minute time frame out here, that is this, and then we'll go to our caller, David in Tennessee. If we take a look at the 30-minute contract here where we have our wave count, our seventh inning stretch in a super bull market, or a super bear market, the counter trend rally shouldn't last. Once you get to that seventh wave, that should be it. That's why we looked at that ES Mini and said, hey, that low earlier this morning around 10 o'clock is an important low. If it gets taken out, it'll be communicated a bunch to you and I. Well, in this case here, we saw gold get down into at about 6:30 last night, get down and form that seventh inning stretch at 1248.70. It moved higher. We're now below that. It's really an A to B equals CD to the downside. If we take a look at what that pattern has set up for us, and this is giving us some different targets for gold out here. This says you're likely to see a move down to 1222 to 1212 out there. So, Danny, I hope that assists you with regard to some targets for a Goldilocks. That's what the charts are saying. Let's go out to Tennessee and speak with David. David, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm fine, sir. I hope you got this gold tagged.
Well, I believe that I do, but tell me what you're doing.
I was looking for an entry point on that JNUG.
JNUG, that is the junior nugget. That is the bull move inside of gold, correct?
Right.
Okay. So at this stage, you're not in a trade. You're just looking to get in on a trade?
Yes, sir.
Okay. I think you've got to wait a while. I think you got to keep your hands in your pockets out here. I believe that gold is going to have a route to the downside that is going to blow people's minds. I think this is a situation where not everybody, but many who got in on this trade at the late stages, they are on the wrong side of this boat, and it's going to get tipped over, and it's going to look ugly. And that is when you want to be a buyer out here. Now, where is that price point, David? Because of the way that gold and the miners work out here. Now, when I'm specifically speaking about gold and it moving south, it's gold. The miners may act differently out there, but the miners, you know, what you'd like to see, whether it's the junior or the other miners or any other individual stocks out there, you'd really like to see the individual equities or the group of equities hold up better than the price of gold. That would be a real nice thing to see out here. But they won't really turn to the upside. They can trade sideways to slightly lower. Maybe they really follow the direction of gold out here. I don't know. I mean, I have a topping pattern inside the mining sector entirely. But what I'm really trying to say is you don't want to buy into the mining sector until we see a bottom form. And I don't believe it's today. I don't believe it is tomorrow. I believe it's going to it's moving south. And there's nothing that you or I can do about it other than make sure we're on the right side of the trade. If you were in a trade, I would say just make sure you have stops in place, you know, and then you're okay. Inside of that, yeah. Okay, good. I think you've got to be patient here. Like I say, I would be trying to time this trade, the junior nugget, with what is specifically going on inside of the gold contract. Inside JNUG, you know, pulling back to $46, there would be nothing wrong with that whatsoever. But again, I would really have to time this with regard to gold and when it makes its turn. And I don't think that it's anytime soon.
I appreciate it, sir.
Okay, you bet. Thanks so much for holding. That was David in Tennessee, and that is ticker symbol JNUG, the Daily Junior Gold Miners ETF out there. And just hard to really gauge a price as to where that might turn. As you know, it's going to move lower, or should certainly move lower, as gold does. And gold is going to move so much lower than everybody thinks out there. Well, not everybody, but it's going to move lower. So just be careful. You don't have to agree with me. You don't have to believe in the patterns that I trade out here, but they're clear across the board with regard to what's going on there. Just make sure you have stops in place. I mean, that's what makes this market. You've got bulls and you got bears out there. And I just like to take a look at the information that the charts provide us and trade accordingly. Okay, let's go take a look at some other things that are going on out here. Let's look at individual stocks. We looked at stocks that were moving to the upside. So when we get back from this break, unless I see something posted into the den, or, oh, I do see an email out here, so we'll go ahead and get to that. And that is an entry for Valley, V-A-L-E. So we'll go take a look at that when we get back from this commercial break. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Well, I can say that from the time we started the show till right now, I don't think we've had much in the way of movement inside the Dow or S&P. I think it was up about 30 points, which it is right now, 31. And the S&P was down about 2 points, and it's down 1.5 points. So not a ton of movement out there, but we do have some really nice, subtle, clear signals. That does suggest that the equity markets do want to move higher out there. And we covered those during the first and second breaks out there. Request here by email from RFH to take a look at an entry into Valley. VALE is the ticker symbol now. They're in the mining sector, all kinds of metals out there, iron ore, gold, silver. What I did on this chart right here is I put up the correlation, the gold chart, the gold futures contract, the continuous contract on the bottom of my chart, just to see how influenced the Valley is by gold. And you'd have to say at this stage here, slight influence, not totally influenced. When gold and the mining equities were making their bottoms in December, Valley was not. Valley didn't go ahead and make a low out here until about January 21st. So we'll say that probably iron ore as a better influence inside of this specific equity. At least that's when we take a look at those correlations. So at this stage here, let's go turn that off so it's not clouding up the screen out here. Let's just delete it altogether. Okay, now we take a look at this equity, which had a nice move, certainly a nice move over the past several days. Now, I think that was on a bunch of news out there. And I apologize. I didn't really pay attention to the news out here with regard to iron ore. It shot up, it came back. Look, here's the deal how you would trade this equity, which is you'd like to buy this as it's coming back to where it broke out. That means we just got to figure out where did it really break out from. You would have to say in this case here, and especially with a brand new set, let me just make sure, a brand new set of market profiles, looks like the weekly profile that just formed out here, that this could, if this can close below 351, and the pullback so far has been on lightish type volume. This looks like a hammer candle to me on the trading day of March 10th. So you want to watch that low. Any close below 358 says that you probably are going to get back into the range of 241 to 268. And I would say so long as price is coming back to that area, doing it with light volume, that would really be where your buy would be. I mean, ultimately, you'd like to be able to get it between 241 and 268 and have your stop somewhere underneath the low of probably January 26 at 213, somewhere right around that level, somewhere below there. So I would be patient out here. You're below the daily profile. This daily profile was set up with a tinge, more than a tinge, a bias to the bullish side. The bulls lost that battle. The bottom of that box is now resistance. This says, hey, you're just in the first week of this weekly profile. Let's see what happens at 351. That happens to be the bottom of that box, but it looks to me like this may pull back further. So I would also say keep your hands in your pocket because there's going to be some influence, right, with regard to gold, with regard to silver. And if Stevie is correct, and it's not really me who's correct, I have to give great thanks to all of those folks referred to as the non-reportable futures traders. That would happen to be guys like me and gals like you out there because they are on the wrong side of the boat. And there are many that are in a boat without a life preserver. And that's not a good situation out there. Always make sure you've got your life preserver. You got to have it. And in the stock market, your life preserver is nothing more than stops on both sides of your trade out here. So gold trading up $20, $12.39. Expect this thing to really start rolling to the downside as more and more people drown out there. So folks, stay tuned because our polar bear, David White, he's going to be up next. And because it's Magnificent Monday, that can only mean one thing. Our man Tom O'Brien will be up from 3 to 5. So have a terrific day, and I'll see you on, sometimes it's called Turnaround Tuesday. We'll just call it Terrific Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.